What's good, guys? It's Decrypt. I'm up $15,000 in 2 weeks. I don't know if you guys can see, but I started on the 14th of June, and it is now, what day is it? July 6th, and I'm up $15,000, right? So you want to find something that creates a move. So here you can see on the 5 minute, it doesn't matter where you're at, where the highs and lows are at. It does not matter. We are at the very top of the market, right? If the market is moving, you want to follow. The first thing I'll look for is I'll pull out a fib retracement to kind of see exactly where price might retrace to, like closest area. And then once it does start retracing, I'll mark that high. So that would be my first target, right? And my first and only target because we're at all-time highs. But around this area, I do see a fair value gap here and I see a fair value gap there. Which one would be better? Well, I don't think that price would fall below the 0.5, and if it did, would probably be stuck in a range, so I'd stay away, right? So I'd more than likely try this one because it's sitting right above the 0.5. And then price also isn't always promised to come down to the 0.5. Price does what it wants to do. So now we know around what area we want to start looking to get in our trade. And then we also know that, price and volume are working together to give us this move. So what I do now is I'll set my risk to reward. Obviously, if we don't respect this fair value gap and the volume, and we're gonna sit in a range all day, I'm gonna set my stop loss halfway through the zone, right? And any candlestick close below, that would be me getting out of my trade, right? It's as simple as that. Super, super simple. It doesn't get harder than that. That's all I use, right? Same thing with Google, right? Pull out your fib retracement. On Google, it was a little bit easier. We broke out of this high and started pushing higher. So I was on the 5 minute. Once I see the market make its move, then I can start looking to get in, right? So same thing, I pull out my fib retracement. I pull out the box, try to find the fair value gap, which is here in between. If you guys don't know what a fair value gap is, I highly recommend watching the bull run course on YouTube that I have on a playlist on my channel, right? So you mark the high. Once you see it start retracing, you mark that high there. And that's going to be your risk to reward. Boom. Market's already made its move. You know where it's headed. Now you just have to be patient and be ready to get in, right? There we go. Now you can move into smaller time frames and start trying to get in a little more accurately. I start adding as we start dropping. On this third candle is when I started adding. I don't think I bottom ticked it. I wasn't looking to bottom tick it, but if we did move towards the fair value gap a little closer, then I would add more to my position, right? And then I always scale out at my first take profit. I'll take a majority of my profits and I let my runners continue on. I think today, or not today, yesterday was Friday. I had a little bit of, I went and played golf. So I didn't hold my runners. I just sold my full position. But that's pretty much it. It really doesn't get too much harder than that, you know? And this is a bull run strat, I more than likely, whenever we start retracing and whenever we start having downside moves, I know it doesn't last as long as the bull run does. So I'll more than likely wait and be patient. I might scalp a few trades to the downside using the same strategy, just to the downside, right? So instead of it going, if we're using our fib retracement to the upside, you would just use it to the downside. Make sense? So super, super simple. Shouldn't be overcomplicated. It's basically all I do to trade on a daily basis. Doesn't get any. That's all you need, right? If I can make $15,000 using this strategy, and that's all I use, that's all you need. And if it doesn't present itself, then you just don't trade. I only took 5 trades last week. One on Monday, one on Wednesday. No, not Wednesday. Yeah, Wednesday, the day before 4th of July. And then Friday, I took 3 trades. They were all bangers. I had a user error that caused me to have a loss because it was actually on this Google trade, which is hilarious. Because this is the one I was saying that I was in, but it was Microsoft. Google, I got in my trade, And then once it started hitting my take profit, I went to go look at my position. Turns out I had grabbed puts instead of calls. And so I ended up taking a loss. I lost my profits. And then we ended up trading. Uh, it was Microsoft Zero DTEs that made me some of my money back. So I pretty much broke even. But, that's just how the dice rolls. And we'll be back next week. But yeah, I hope you guys enjoyed this little session. This is what makes me $15,000 every 2 weeks or more. There's, some months I make 30, 40,000. It just depends, the market moves how it wants to. So if it's not there or there's less trades than there were last month, it just is how it is. Happy with what you get, right? But that's pretty much it. It's been Decrypt. I'm out of here.